Good day. Welcome to the PSG World Offshore Performance Overview for January 2026. Markets were mixed in January. The MSCI ACWI ended the month 0.34% lower, while the MSCI World was also down by 1.05%. Emerging markets outperformed, posting a 5.35% return. The S&P 500 ended the month down by 1.81%. While the FTSE 100 was up by 1.69% in the UK. Asian markets were mixed over the month as Hong Kong equities were up by 3.1%, while Japanese equities were also up by 3.89%. Global property rose by 0.55% over the month, sovereign bonds were down by 2.33%, while investment-grade bonds were also down by 2.32%. Emerging markets bonds trimmed the most, posting a negative 2.99% return. Over the month, Fidelity, Capital Group and T-Rowe appeared amongst our top performers, while 91 and Veritas were amongst our bottom performers. 17 funds were included in our quantitative radar, while 8 funds were in our qualitative radar. The Global Preserver Fund of Fund USD class outperformed the sector by 67 basis points, with 3 out of 5 funds outperforming the benchmark. The GBP class underperformed by 92 basis points, with only 1 out of 5 funds outperforming the sector. The USD class was in the second quartile for the 3-year recommended investment period, while the GBP class was in the fourth quartile. The Global Moderate Fund of Fund outperformed the sector by 24 basis points as 4 out of 6 funds outperformed the benchmark. The fund has managed to produce a second quartile performance over its 5-year recommended investment period. The Global Flexible Fund of Fund USD class underperformed the sector by 1.09% as only 2 out of 7 managers outperformed the benchmark. The GBP class also underperformed the sector by 2.26%, with all 7 funds underperforming the benchmark. The USD fund is in the first quartile over the 7 years, while the GBP is also in the first quartile over the 7-year investment recommended period. The Global Creator Fund of Fund also underperformed the sector by 40 basis points, with only 4 out of 10 funds outperforming the benchmark. The fund is in the first quartile over its 7-year recommended investment period. The solutions continue to produce consistent first and second quartile performance over the long term and are performing relatively well over the recommended investment period. And lastly, looking at our 3-pillar approach, even with the volatility over the year, the team still achieved the objective of delivering consistent above average performance at below average risk while maintaining a competitive price. Thank you.